Alrighty, folks, it is time to find out how many of you took good advice and how many of you were frankly stupid. What do I mean by this? We tried to help you understand over the last couple of weeks that with rates falling, there was an anticipation with the normies that a Fed rate cut of a quarter would drop mortgage rates a quarter. We, of course, did everything we could. With every waking breath, we told you that is not how it works. In fact, I warned you explicitly, if you like it, lock it. But at the end of the day, consumers will do what they do. And some of you were expecting mortgage rates to fall a quarter of a point yesterday, and they went up, and they are up again today. So, Dustin, you are in the business. You are processing hundreds of loans at all times. How many people were stupid and missed it again versus how many people actually liked it, locked it, and they're just rolling? What's going on?
Yeah, I mean, it's funny because we have this, conversation all the time. And over the last 5 years on the channel, just the overarching theme of if you like it, lock it, and
Mm-hmm.
getting, clients educated and making videos for them about the fact that the feds, you know, don't have a direct correlation. Yes, they have somewhat of an impact. No disagreeing on that with where mortgage rates go. But ultimately, everybody and their mother and brother and cousin knew that the feds were most likely going to cut at least
Yep.
25 basis points, which they did, meaning it was built into the rate sheets. And I sound like a broken
Exactly.
record, but, we had the same thing that happened last September and October. Feds cut rates. We get 10 minutes of like, yes, we look at the dot plot. It looks dovish. Powell goes on the mic. Boom. We get the hawkish
Yanks
remarks
it.
that we aren't
Yeah.
looking for. And now rates are up after a Fed rate cut, right? And, I'll let you
Significantly up.
obviously.
They're up 2 days in a row. Yeah.
I mean, what did we have? It was funny to watch. Like, we watch it every time the Fed
Yeah.
minutes and meetings over. But I think for about 10, 15 minutes, the 10-year broke forward, even got to like
Sub. Yeah. I
391,
was recording
right?
live. I pulled it up on my phone. The lowest I saw was 392 was the
Yeah.
lowest I saw.
And that was like from 11 to 11:12, we'll call it.
And then
Like
Jerome
12
Powell
minutes.
and gone.
Yep. Now we're at 418 right now. What is it? I can't
I don't know. Yeah, that's all right.
pull
I'll
it
take
up,
a look.
but
No, I think it's higher than that. I think it's up again today. Let me just pull it up. But yeah, so again, folks, hopefully you listen. Hopefully you did. It's 4114. So yeah,
okay.
call it for 412.
Okay.
But again, that's a significant move from 3.9 to 4.11.
That's
That's a
not a normal move in 24
uh,
hours.
that's not. And again, it's all
Especially,
because Jerome Powell was a hawk.
yeah.
Um, again, folks, hopefully this is probably the fourth time we've given you this warning. Stop. Again, I get it. I get it. Consumers love a trend and they love betting on a trend. But when you are working, this is what drives me crazy. And I have seen this. I can only imagine how many times you see this. There's somebody that's doing a refi. And let's just say the refi is going to save them $400 a month. Let's just make some stuff up. And oh, by the way, it's going to cost them, I don't know, $5,000. So it's about a 2-year break even. Certainly something I would do for a 2-year break even. And then they get into the paperwork, they get going, and they're going, you know what? I'm going to bet on it getting better. Or I'm going to bet on another eighth or whatever the bet is. Because rates are going down, so they got to keep going, right, Dustin? That's how this works. Not how it works. But they ultimately don't understand what that eighth is. So again, they think an eighth, they think lower is better, and it is. But when you do the math on a 30-year mortgage, an eighth might be like $8. So you're giving up $400 in savings going the other direction for $8. I
Yeah.
mean, people, what are you doing? Do the math, right?
No, you nailed it on the head. And like, if you want to pull it up a mortgage calculator, everybody's loan amount's going to be different. But
Sure.
I kind of go over this sometimes with the, clients that we have that are very, you know, fixated on 599 or 699 versus 7.1 or 6.1, right? And
Right.
that's
Yeah.
an eighth of a point. It's mentally they're trying to win and tell themselves that they got a better deal
Yeah.
because of that 5 handle or 6 handle, whatever it might be. But
Right.
pull up a mortgage calculator, $100,000, loan amount. Now every, 500,000 will be different, but an eighth of a
Sure.
point, $7 a month on $100,000 loan, right? So it's not going to
What are we
make the
doing,
deal
folks? What
that's
are we doing?
great, yeah, fantastic, or it's not going to make the deal that's great bad,
Yeah.
right? So like
Exactly.
there's
Yeah.
just there's just not a lot of benefit in this market right now to be sitting on the sidelines waiting
Yeah.
for the magic kind of unicorn rate to pop up at 3.5, because it's not happening.
Yeah. Well, it's very interesting because I think there's three things potentially going on as rates, work slowly over time, go lower. The first one I think is actually happening right now, and we saw some numbers on Wednesday, refi. And I think most things today are rate and term. There's a lot of people that got in these 2-1 buy downs that frankly got remarkably lucky because their rates were resetting or about to reset. So I think there's a ton of rate and term refis going on right now. The second one that may now be on the back burner was cash out refis, right? Because I think there was a lot of people setting up for cash out refis, myself included, that were like, you know what? I got all this equity. We get rates, 6-ish. I might go scoop up 500,000, 750, $1 million just to have some more dry powder. And then the third one is purchases. I don't think purchases reignited yet, but what's going on in refi land? Are most things rate and term, or are people doing cash out?
Obviously, you got to take it with a grain of salt in terms of with Convoy's book of business. I'll touch on first. We
Yeah.
still do a significant amount of more cash out because a lot of our clients are
Or
naturally
investors.
real
Yeah.
estate
Yeah.
investors and they're
Makes
fixing it
sense.
up. And yeah, the amount of rate and term refis that we have done though in the last just month compared to what we've done over the last 24 months is crazy.
There you
Because,
go. That's exactly.
like, I haven't ran the numbers internally. I could, give it to you guys next week, but just week over, on average, maybe our company does 10% of the loans we put in our rate and term refis.
Okay.
I'd say in the last like month, probably 30 to 40%.
That's
Okay, are
exactly
rate
what
and
I
term
thought would happen.
refis.
Yes.
Yeah,
That's what
like
I'm thinking.
there's a lot of them. And like, very interesting, but I'm giving a warning right now. Anybody that is looking at the DSCR bank statement non-QM side and has a refi in place, I highly, highly, highly suggest locking it in now, because since yesterday, you can pretty much guarantee that all conventional loans are basically up 15 to 20 basis points, okay,
Right.
rate wise. DSCR hasn't moved yet.
It will.
Non-QM hasn't moved yet. It will. So take advantage of the fact
Yeah.
that you get a little 2, 3,
Cute.
maybe 5 day
Yeah.
kind of
Yeah.
heads up and
Yeah.
lock that thing in, because it's going up. I promise you.
Amen. Love that. Love that. Well, I want to talk about this subject. It's kind of a right turn, but I'm going to put it here anyway. The Fed is a mess.
Yeah.
We have one Fed president talking about raising rates. We've got another Fed president talking about 6 rate cuts in 2025 or 5 more rate cuts in 2025. We got inflation up. We got growth up. We got unemployment up. We got stagflation fears. The Fed is it's chaos right now. What's going on in the Fed?
I mean, I'm going to point it back to you after saying it, but I think, all right, so I was looking at it, I might be wrong, but I know the number, with 12 of them, one of them, one of them wanted a rate hike,
Yeah.
right? Am I crazy?
Yeah. No, one wants a
Uh,
rate hike. Yes. One sees a rate hike this year. I can't believe it.
yeah, and then 5 or like 6 or 7, just want one.
Yeah.
And then the other, whatever that leaves me, 3 or 4 want
No, I,
2 to
I, I
5
think it's
one,
this.
right?
I think so. Not what was it? Let's say 10 of the 18 see 2 more.
Okay.
One sees 5 more.
That's the new guy,
One,
right?
yeah, the new guy, clearly the new guy. One sees a rate hike. 6 see no more.
There you go. So
What?
like,
What? I don't get it. What's going on?
that's where I'm gonna point it back at you. I can't remember the last time, and it's always going to be a pretty wide, spread or disagreement on rate cut, rate hike, or pause
This is
between all the Fed
extreme.
officials. But this is
This is
extreme, right?
this is
Like
yeah.
this is,
I do not recall a time, and I said this on the daily financial news, I think yesterday. I fully expected the Fed to have 3 camps yesterday. No cut, quarter point, half. Now, in reality, if you look at the press clippings, it was an 11-1 vote. I think that 11 was complete poppycock and simply people banding together to protect the institution nonsense. I
yeah,
think of those people as were given true serum and voted with their hearts. we would have got a completely different vote. But it is what it is. But you're absolutely right. The dot plot is like truth serum. Somebody thinks we should hike, and somebody thinks we should cut 6 times.
Yeah,
with
like
all
how's
that
that
other
possible?
crap between. So let's talk about that. Why is it possible? First thing I will say is at inflection points in the economy, you get stuff like this. And, maybe we are at a very nasty inflection point, one way or the other. Who knows? So that's possible. Number 2, we have, different opinions. I would have guessed there were 3 votes for a 50, but the fact that Michelle Bowman and Christopher Waller did not vote that way probably kicks them out of the running for the job. They're not going to get the job if they don't, vote 50. So they're out. And yeah, it's just wild to think about it. And again, it just leads me back to we don't know where we are. And that's a dangerous place to be. And then if you think about interest rates, especially the long end, right? The 10-year, the 30-year, if you don't know where you are, that screams risk premium, higher rates. That's what that screams to me. I don't know. That seems like where we are.
No, you nailed it right on the head, and that's exactly what has happened the last 3-4 years, right?
Yeah, exactly.
Risk premiums have been higher because of the uncertainty, and I might be wrong, but I feel like I remember. I think you were calling for 50.
I did. I called for 50 and was wrong. Yep.
I wasn't. I'm not smarter than you on the economic side of our country. I thought it'd be 25, but now that we got 25, I want to ask you, what do you think we have in store then, as of today, September 18th, for 25 or 50 more the rest of the year?
Oh, I think it's got to be 50. I think it's a mistake. I believe the job market is weaker than the numbers are saying. I have seen the unemployment rate take the elevator up multiple times. And I believe that is coming. I believe there will be some time in the next 4 months where the unemployment rate will go from 4.3 to 4.8 to 5.1. Right? That's the elevator, right? It doesn't move in tenths. It moves in big swags. And once that happens, too late, Powell. Powell. So I fundamentally believe that the numbers are weaker. I think the economy is weaker. And again, that should get people's attention, because I was the guy all year that said no cut. And then we got that horrible jobs revision, followed by another horrible jobs revision, by a negative number in June. And I'm like, this ship is sinking. And it's taking on water. And you're not going to fix it with a quarter. The reason I thought we should get a half is I think without question, they would have cut in July if they had the data before the meeting. They didn't.
100%.
So they didn't cut.
I agree with that.
And July was a mistake. And I thought they should have cut in September as well. Hence my call for a 50, right? Because they have to make up for the mistake. Yep. But they didn't. They didn't even acknowledge the mistake. And it's going to bite him in the ass. So I have to imagine we have at least, like, if you were going to tell me the number was 2, I'm not taking the under. I'm not taking 1. All right. It really could still be 3. The job market might be weak enough where we get a 50 either in November, October, or December. So it's going to be 2 or 3, I think.
I'm aligned with that, and I'm thinking that yesterday's comments was to kind of preserve and stand almighty until that time happens. But I think we would be in trouble if we aren't going to actually see 2 or 3 by the end of the year.
Yeah, at the end of the day, it was really funny, like you talked about. I was watching the dot plot and the announcement and watching the 10-year break and then Jerome Powell getting up in front of the microphone and being a big-ass pterodactyl hawk and just watching rates go higher. And I'm going, well, Trump's not going to like that.
No, he ain't happy. He ain't happy.
That's funny. Well, let's take a right turn. I know you do a lot of work with One Rental at a Time audience. Jonathan sent me an exchange from my One Rental at a Time follower that I actually want to apologize for. I won't get into any names because names are irrelevant. It's the behavior that I didn't like. Jonathan was working with a one rental at a time fan, bending over backwards, trying to accelerate time frames, all the things, frankly, that I would expect of you and your partner, Jonathan. But then the one rental at a time fan crossed the chasm, crossed the line, got disrespectful, wasn't acting with the same sense of urgency. And that is not what I expect from my audience. My audience, because they can get to the president, get to the CEO, should be respectful. You guys have 3 assistants and 5 phones. You don't have to be doing this. So the fact that somebody in my audience was rude and disrespectful, I want to apologize for. And I want to tell you as black and white as possible. If anybody in my community behaves poorly, tell them to go kick rocks. They can go get something somewhere else. Don't let your 5-year relationship with me tell you to put up with bad behavior. Life is too short. If somebody is poison, tell them to kick rocks. You will not hurt my feelings. So don't bend over backwards. Don't feel bad. Tell your partner that he did the right thing. And guys, how many of you can get access to a president or a CEO at a lender, and you're going to be disrespectful and act like you're the only customer? They do hundreds of loans a week. I mean, what are you doing? Be better. I hold my audience to a very high level. And in this case, I was disappointed. So I hope everybody does better. Dustin, have a wonderful day. Where can people reach out?
Go to convoyhomeloans.com. Just make sure you click the drop down that says you came from ORAT.
Thank you, buddy. Take care.